Hey guys, so as promised, I'm here with a video on the basics of stock market here. Here we'll discuss about what the market is, who can trade, and what are the market timings, and the types of trading, and how you can possibly build a parallel source of income using the stock market. So first of all, a little bit of introduction about myself. I'm Sandeepan, as you all know, and the WhatsApp group that you are in. I created this group few months back with three or four of my friends max, and we had this group running. We used to discuss about markets and which stocks to buy, which ones to sell, and after that, I thought, okay, let's expand the group a little. So I posted in Bengalis in Bangalore from where you all joined, and to be honest, I never expected these many people to join. We started with 4 or 5 members, but right now I think there are more than 50 members in our group. So thank you all for the overwhelming response from the group. You all are very welcome, and it's good, right? Means we all are interested in the market, and some of us are beginners, some of us are very experienced here, as I see from all the chats. And in a way, we can all help each other. We can all, increase each other's knowledge, and we can discuss, and collectively we can move on to financial freedom. Yeah, I think you might have heard that term. I'll explain it. Don't worry. I work in Infosys right now, and since the time I graduated, I have always been employed in one company or the other. But this is not the life that I wanted. I have always, tried to establish a secondary source of income. First, I was into, live streaming games, and then I was into YouTubing. I was also into photography for a brief period of time. Then coding and this and that and whatever. And after that, I came into the world of trading, and it was like an instant attraction for me. It attracted me like a magnet. I got into it. I accumulated a bit of capital, and with a lot of confidence, with a lot of energy, I did the most horrible mistake that a beginner can do in trading. I got into options trading. Yeah, options is such a thing that can give you an enormous amount of profit if you know what you're doing, if you know the right tips and tricks, when to enter, when to exit. I'll cover all of that, don't worry. But if you don't know any of these, if you make the slightest mistake, it can eat away all your capital. You can be, broke in an instant if you don't know what you're doing in F&O market. F&O means futures and options. I started trading in options, and the profits started rolling in. I was a beginner, but still I was making around 2,000 rupees per day, 3,000 rupees per day, all the way up to 10,000 rupees per day. And I did not used to sit in front of the market for the whole time. I used to sit at 9:15 the market opens in Indian market. I used to sit, be prepared, all my charts are ready, all my, I'll enter here, I'll exit there, all my strategies are ready. I'm sitting in front of the market at 9:15, and by 9:30 or hardly by 10 o'clock, I'm done. I'm done for the whole day, and I have my pockets full of profits, and that's it. That was my option trading life. I was feeling on top of the world. I was feeling like a king. I thought that, why does everybody struggle with the market when it's this easy? It's this easy to make money. I was making money left and right. Yeah, there were losing days in between. Means, a few days I lost 3,000 rupees or, 4,000 rupees. Those are guaranteed in the market. What I did not understand at that time is that we are in a bull run right now. Bull run means after COVID, market has been rising, 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 and rising till this date. And this does not happen always. So that is the reason. That is the only reason why I was making this amount of money and so easily. This does not happen often in the market. There are times when markets are sideways, completely sideways. It's not moving up, it's not moving down, it's just going sideways. Even in that situation also you can make money, but the way I was doing it, it's not possible to make money by that in a sideways market. So once market became sideways for a short amount of time, I started losing. I started losing badly. I could not control my losses, and I was filled with rage. I used to think that I earned so much in the market, and all these profits are going away. So I need to trade more. I need to trade more. I need to invest more. I need to recover all my losses, and that led to more losses. So fortunately, I came to my senses well before all of my profits were exhausted, and I came out of options trading temporarily. So that was one of the best things that I did. And I thought that no, This is not the process. This cannot happen. If I need to make money in the market for the long term, if I need to be in the market, if I need to keep playing in the market, then I need to study. I need to gather knowledge. I need to know how the market works. And now I knew that all the money I made in the market trading options as a beginner, that was just a shot of luck. Luck favored me, that's why I made money. Had luck not favored me, I would have lost big time. That's the same thing. To each and every one of you who is beginning right now and who is new in the stock market, I'd advise you to stay away from the futures and options market, especially options. So I started reading, I started studying about the market, I started watching videos, I started backtesting, I started studying charts and everything. I studied technicals, and even to this day, I'm still studying. It's never a time comes like this that I can say that, yeah, I know everything. No, you don't know everything. I don't know what kind of trader you are. I don't know how much experienced of a trader you are, but still you cannot know everything. How can you? Because market does not follow any rule. Market is random. It is unstructured data. In mathematics, if you know a formula, yeah, this will go here, that will go here, and this is the result I'll get. That you can answer. But nothing is confirmed in the market. Nothing is structural in the market. Even if you know the rules, market will not always follow those rules. So if you have a strategy, it may happen that 90% of the time your strategy works, but it's not possible that 100% of the time your strategies will work. That's why you need knowledge, you need a risk management, you need the correct mindset to trade in the market, to stay in the market, to stay away from the market when needed, and most of all, you need patience. If you are not patient in the market, nothing is going to go your way. Trust me. So let's begin. In a nutshell, these are the four milestones to become a professional trader: mind management, risk management, tools management, and trade management. Let's start with the mind. You might have heard the phrase, your mind is your greatest asset. But in the market, your mind can also be your greatest enemy. Stock market is driven by emotions. All over the world, emotions affect the prices going up and down. So the better control you have on your mind, the better you can trade in the market and the longer you can sustain in the market. The feelings like hope, fear, greed, indecision, these are the things that drive the market. So once you learn how to control these feelings, you're already 10 steps ahead of the crowd. Risk management. This is a big part in the market. Even the big players like mutual funds, FIIs, and DIIs, they also sometimes fail in this area. Normally, people lose money in the stock market. For example, in this recent COVID, market crashed like anything. So many traders, so many investors were completely wiped out in a matter of days, weeks. Only a handful of people actually made money in the crash because they managed their risk in an efficient way. Tools management. For doing anything in your life, what do you need? You need the proper tools. Similarly, the market provides you with tools which make your trading life easier, like moving averages, Bollinger Bands, RSI, MACD. There are lots of them. You don't obviously need all of them, just one or two will be absolutely fine if you know how to use them. Trade management. This means having a solid trading system. You can't just buy anything anywhere you like and sell anywhere you like. If you're doing that, you're not trading, you're gambling, which means your success will depend on luck. You need to have a trading system, which means a set of rules to exactly define when to buy, when to hold, when to pyramid, when to sell, and when to not do anything. Now, what most people do, they take a shortcut and focus only on the last 2 points. When you only know your tools and trades, you become a good analyst. There are lots of analysts in the world who try to predict market movements. We see them in newspapers, TVs, YouTube, discussing about where Nifty will go from here, where Sensex will go in next 2 months. If you want to be a trader, you need complete mastery on your mind and risk. You need to know your capital. You need to know how much you can risk in a trade, how many shares you should buy so it doesn't exceed the calculated risk, what to do in case the trade doesn't go in your favor. Like suppose you take a trade based on your calculations, but midway the price started going in the opposite direction. What should you do now? How should you handle it? Should you wait or come out? In market, you cannot let your emotions answer these questions. That's why it's very important to focus on all four of these to be a professional trader. Let's talk about some myths in the market. Number one, buy cheap, sell expensive. Now, this is a very common misconception. Since childhood, we are taught to buy on discounts, on sales. We have been tuned to buy as soon as the price drops. So suppose a stock price drops from 100 to 50. Should you buy it? No, because there's a reason for the drop in price. Maybe the company is not doing well. Maybe the market condition is affecting the company's reputation. Maybe it's about to shut down. Who knows? For example, Yes Bank. It's available at rupees 12 now. Should you buy? No, you should avoid it. The company is not doing well, so why would you buy? Second, money can be made only in uptrend. This is another myth. People think money can be made only when the market goes up. Actually, money can be made irrespective of what the market does. Truth is, more and quick money can be made from a market crash compared to an uptrend. Third, market is risky. Totally wrong. It's the human mind that's risky, not the markets. Just think about it. When you were a kid and didn't know how to, suppose, ride a bicycle, were you afraid to ride one? Yeah. Did you think it was risky and you might fall? Yes. But after you learnt it, was it risky anymore? No. Because now you could ride it. You knew how bicycles worked. That means our minds are risky. As long as we don't know about the market, we consider it risky. Once we are educated about it and know how it works, the risk vanishes. Next, financial background is essential. Nope. There are countless traders and investors in the world who are not from finance background. Engineers, lawyers, YouTubers, doctors, homemakers, teachers, anyone can trade and be successful. Hope for the best or never give up. This one is poison in the market. Suppose, I'll give you an example. Mr. A buys 100 shares of some company at rupees 100. Next day, the price drops to 90. Mr. A is holding his shares. Next day, again the price drops to 80. Mr. A still does not sell. He is in loss, but he hopes the market will go up in near future and does not give up. Price drops to 70. Now Mr. A has an awesome idea. He goes in and buys another 100 shares at 70 to bring down his average price to 85. Now he is happy. His buy price dropped from original 100 to 85. Next day again market goes down to 50. Now Mr. A says, I won't sell my shares. If I sell now, I'll be in a huge loss. I'll wait for the price to go up because I'm a long-term investor. That's how majority of long-term investors are born in the market. Not by choice, but by default. So you must never hope for the best in market. Be smart and know when to give up. So now let's get down to the interesting part, analysis. So there are two sure shot ways in the market in which you can conduct your analysis. First is fundamental analysis, second is technical analysis. These are the only two ways which will help you make consistent profits in the market for a very long term. If you're not following either of these, then I'm sorry, you're not following the procedure and you're basically gambling in the market and your success is not at all guaranteed. When we're talking about fundamental analysis, we are basically talking about studying the company profile, the balance sheet, the profit and loss statements. You might have already heard some of these terms, the financial ratios of the company, the government policies, the economic condition, the political situation in the country, and all of these. By studying all these things for a single company, you can successfully evaluate the company profile and you can make a judgment on whether to invest in that company or whether to stay away from that company. This is possible if you study all these points one by one. But there is one catch here. To analyze all these things one after the other for one single company, I'm talking about only one company, there will be multiple companies that you will want to analyze. To analyze all these things, you will need a finance degree, or some kind of finance education. You'll need a finance background for this thing. You'll need to invest time, you'll need to invest a lot of energies in learning the balance sheet of companies, learning what the individual financial ratios mean. You'll need to study the news, you'll need to see news channels, what the government is doing, what are the political situations in the country, government is favoring which company, it's against which company, what IPOs are coming, and basically the full company profile you will need to evaluate before making decision to invest in one single company. Now imagine there are thousands of companies in India alone. I'm not talking about the whole world right now. So how many companies will you analyze like this? I think we all can agree on one single point here, that all of us, I'm assuming here that all of us are not from the financial background. So I think we can agree on one point, that we don't have the time and energy to do all these analysis. We most of us don't have a financial degree, financial background, and we are not interested in studying all these points for a company. And even if we get a degree, even if we get a financial background after years of studying and practicing, then also it's not guaranteed that each of us will be good enough in all of these points. Some of us will be good in analyzing perhaps the balance sheet or the financial ratios. Others will be good in analyzing the government policy, the political situation. Some of us may be good in analyzing the promoters and management of the company. So there's very little chance that one person will be an expert in all of these fields. So what is the solution of all this? Solution is, think about it. All these points, if taken individually, the balance sheet, profit and loss, promoters, management of the company, the government, politics, everything, they all come and converge into a single product that is called price. The price of the company can say a million things at once. You don't need to analyze any of the previous points separately. You just need the price. Like, you might have heard, a picture can say 1,000 words. Similarly, a price can say a million things about a company. And that is where technical analysis comes in, which is the study of price. Price is derived from all the fundamental analysis parameters that we discussed right now. And what can price do? Price can either go up, or it can go down, or it can go sideways. So what does that say about the company? If price is going up, that means the fundamentals are good. Something good is happening in the company. Maybe some management change has happened for good, or maybe government is supporting the company. Maybe it's making tons of profits. We don't need to know. All we know is that the price is going up. That means the fundamentals are good. If the price is going down, that means the fundamentals are bad. Maybe the company is making losses, maybe some other things. We don't need to know. If the price is going sideways, that means the company is at a standstill. It's neither making profit, it's not making loss. So you see, price says 1,000 words. Technical analysis is actually called a backdoor entry to fundamental analysis. So if you learn to analyze the markets technically, that means if you can study the price, then you don't need anything. You don't need to read any newspaper, you don't need to watch any news channel, you don't need tips and tricks from any friends, you don't need anything. You will take one look at the chart, the chart, the graph of time and price. You'll take one look at the charts, you'll see the price, and you'll say that this company is having good fundamentals, it's going to rise, I should buy it. You'll take one look at the charts, you'll see that this company's price is falling, so there must be something wrong with the fundamentals. I don't need to care, I don't need to know what is wrong with the fundamentals, nothing. You know what happens? Many people think that why the market is falling, why the market is going up. Yes Bank, it fell from 400 rupees to 13 rupees right now. Why it happened? Tata Motors fell from, I don't know, 500 to 600 to 80, and now it's again rising. So people wonder why it happens. Why Tata Motor first fell and now it's again rising? What will you do with the reason? You don't need the reason. You see, Yes Bank is falling, that's it. Get out. Sell the shares. You don't need to hold Yes Bank anymore. You see, Tata Motors is falling like that. It doesn't happen that a company price will fall from 600 rupees to 80 rupees in one day. It doesn't happen. First it will fall to 500, then 450, then 400. Like that, step by step it will fall. So up to a certain step you hold. After that, if you see that it's still falling, get out. Get out of Tata Motors. And after that, it again started rising, right? Then again get in. That is the process. You don't need to know why the share price is falling. You don't need to know why the share price is rising. You don't need to know anything behind what is happening behind the curtain. Some management change is happening, or semiconductor shortage, or whatever is happening in the world. You don't need to worry about that. Just look at the price. The price tells 1,000 words. Price has a story behind itself. You'll get to know everything about the market by just seeing the charts. Whatever change is happening in the world, dollar price increasing, falling, crude oil price going up, going down, whatever is happening in the world, all those developments are discounted already in the price. So the only thing that you need to follow is the chart. That's it. Even if you don't know anything about the market, even if you don't know anything about a particular company, you don't know what it is, you don't know what it manufactures, you don't know what it does, anything, you don't need to worry. You can still invest, you can still trade in that share. You just need to have a knowledge of the price. Price is called the leading indicator, because whatever fundamental changes are happening in the market, whatever has already happened in the market, and whatever is going to happen in the market in the future, everything is already included in price. Price knows everything. Price has all the information in the world. So whatever changes are going to happen, you can analyze that by seeing the price patterns. There are certain patterns that you can look for in the chart. We'll get to that later. So what I'm saying here is, if you know how to read the price, you know how to read the whole company. You don't need anything else. But the thing is that what I want to say here is, price. What I want to say.